traders. I'm Mike, and this is the second video about MACD. If you haven't watched the first one, it was about different types of MACD. I introduced 3 types and how to use the settings and how to put it on chart and what it means to go up and down and how you can get a signal from it. So go and watch that. The link is at the top right corner. Click on that, go watch it. And if you're familiar with the MACD, so you don't need to watch that one. Today we're gonna have some standard signals that we can get from MACD and some advanced versions. Let's put it on chart. I use this TT MACD indicator that I introduced in the first version. This is the standard setting, and that's how it looks. It's a little bit choppier than the previous, the standard MT4 MACD. So the first thing that we must do is on any type of analysis that you do is just zoom out a little bit and look at the big picture. It's a bird's eye view of what's going on in the market, how the price, how that currency pair moves. So you need about 1,000 candles, 1,000 bars in your chart to see what's going on. Doesn't matter what time frame you're on. I'm on daily, you're on 5 minutes. Just you need 1,000 candles at least. So this is how the market has moved, this currency pair, which is USD JPY, and that's how the MACD has reacted to the market. So MACD is a little bit lagging indicator, so you can see that the market has moved a little bit ahead of the MACD. So we have a big drop here, so the MACD has dropped, but the MACD wasn't on top, it just was barely above zero line. But this time here, MACD was above zero line, way ahead. I'm talking about there and this one. As you can see, that was the top when the MACD was the highest. The second time, the price was higher, but the MACD didn't make a high. And the third time, the price dropped and market just crashed. So yeah, you must see this kind of reaction to the market to see how you can get some signals out of MACD. So now, you can zoom in a little bit and see in the past year how the price has moved. You know, the market is just an evolving creature. The moves are different in different situations. Sometimes some war is going on in the world, so the market reacts to that war. Sometimes, or like right now, Trump has kind of announced a trade war with China, Russia, Iran, Turkey. So kind of and North Korea as well. So it's kind of a market is volatile. So you must know these conditions and how the market moves. So moves are different during the different periods of history. So when you see the past year, this is the February 2018 and now it's the July 2019. So you can see about like 1.5 years, the price has been in up and down move, in a very good trending market, you know. There are some choppy moves, but the whole period of time during a 1.5 year has been a very good trending move. So you can get very good signals out of this. As you can see, I've put the 12 and 26 moving average on chart just to copy the settings of the MACD. But the price has crossed this moving average many times, but didn't fall or didn't rise very fast. So the price is reacting to another level of, you know, support and resistance. So we can't trust the 21 or 26 MACD setting. You know, the price can break, but it doesn't go anywhere. It just comes back and hits your stop loss. So you must know that beforehand to just get out of the market as soon as you can, or get in at the right time. As you can see, sometimes MACD has been moving up and down, just going barely under zero around this area, and the market just moves back up and moves way up. But this time that the market crashed, again, market moved back up straight away, and you could get a very good signal. It was not choppy, just straight up. So now you can zoom in a little bit more and see how the price exactly moved. As you can see here, we have a cross on the MACD, and this MACD, whenever the two lines, MACD and signal line, cross, the histogram crosses the zero line. So whenever the color changes, you can see that the market has, well, the MACD produced a signal. And whenever it gets thinner, these thinner lines, as you can see, the histogram is a thin line and the thick line, it shows that the market has run out of steam and you can just get out of your trade very early on. The market still is moving up, as you can see here. If I zoom in a little bit more. So this candle here is the exit candle for us because the MACD has a very thin line. The histogram has a thin line. But again, after like 5-6 days, the price is just continue moving in the same direction. The price reacted to the 26 moving average, but again, keeps going on. So the MACD histogram goes down. It's just almost barely trying to cross the zero line downward, but again, the up move starts and it keeps going on. So you could get in the market here because the histogram has a thicker line and the price crossed the 21 moving average and closed above the moving average and it's going upward. The other thing is the same way you can have a very good signal out of the MACD, not the first time that they cross the signal and MACD line, but the second time that they get close together and they open up again. They call it a knot, something like around here. See this area? The MACD line got close to the signal line, but again, it opened up and moved on. It's a little bit here as well, and a little bit there. So these times are very good time to get a very good signal out of MACD. So let me put a line there. That candle, and probably this one. And at the third time, probably this candle or maybe next candle. Yeah, this one. These three candles, the market has been moving. See this line? This candle broke this resistance line. Again, this line, we had a little bit of resistance and the bear market here, the market rested, and then this candle just pushed through this resistance here and then moved up, and this one as well. So let me delete all these. So this idea of having a knot in the MACD is a very good way of trend continuation trading. So whenever this happens and the market opens up with a good move upward or downward, you can get in with a almost 90% accuracy to get a very good signal. So if you had entered after the close of this candle, the market had moved probably around 150 pips. So our ATR is 51 pips. So that's the 3 times of ATR, very, very good target with a very low risk. You could put your stop loss under this candle, 62 pips or 51 pips. Price didn't even get close to this price. So that's the second way of getting a very good signal out of MACD. The third way of looking at MACD is the same as a stochastic: convergence, divergence. We have a very good top here, a little bit higher top there. But as you can see, MACD made a good top there, but the second top was a lower high. So we have a higher high in the price, but we have a lower high in the MACD. The idea is that normally the indicator follows the price because the indicator is built on the price. But this time that we have this kind of divergences and convergences, the price follows the indicator. As you can see, we have a top there, but the market just dropped, fell, and it went to the other direction. How can you find these? You have to zoom out a little bit to see the tops and the bottoms of the market and tops and bottoms of the indicator. If I zoom in, whenever you have a cross in the MACD, and in this MACD, the histogram crosses below the zero line. As you can see, the MACD didn't make it the higher high, so it's a lower high. This candle here, you could enter with almost certainty that the market's gonna go your way. Nothing is certain 100% on the market, but you can increase your chances from like 50-60% to about 80%. And the market just fell straight away, about 250 pips. That's 5 times of ATR, and it's a very good target. And after that, you could just, it's a downtrend, you know, market is moving downtrend. Every time the MACD crosses again under zero, which is around there, you could get another signal, 150 pips. Another time almost there. This time the candle has just moved, but you could get about 50 pips as well. Or if you had another entry there, that was about 130 pips. So as you can see, you could have 3 trades with almost certainty that it's gonna hit your target without any kind of a drawdown, because after your entry, market didn't move much upward against you. So that's the third way of looking at market with the use of MACD. So let's wrap up what we discussed today. Zoom out on your chart. You need about 1,000 candles to check that how indicator reacted to the market as price moved, and how the tops, the highs, and the lows are showing that the price moved in which way. So you must know that. You must learn the behavior of the currency pair. Even in the stock market, it's the same. You know, you have to learn how the price is moving. So every asset is a different kind of creature. So the second thing is that you must know that the higher highs and the lower lows are reliable or not. The signals that the indicator produces is reliable or not. How many times the indicator give you a signal but the market didn't move in your direction? You must know that the accuracy of the signal is higher than the normal or not. How you can get good signals where the market moved exactly as the indicator showed. Then you can zoom in a little bit and get the very good signals as you guessed it's gonna do when you zoomed out. Second thing was this idea of knot. Whenever the MACD line gets close to the signal line and it just opens up again and moves in the same direction, that's the idea of a knot. As you can see, we have one there and the market moved very good. And the third idea was the divergence in the MACD and price. So the price makes a higher high, this one and that one, but the MACD doesn't. Makes a lower high. So after that, market's gonna just drop and give you a very good signal, 168 pips. Yeah, this is the third way of looking at MACD. And if you have these 3 tools in your toolbox and you add a couple of more indicators just to see the momentum and the money flow, you will have a very good strategy. You can make a very good strategy out of this. In the next video, I'm gonna discuss the different types of MACD that I'm using. I actually don't use these type of a standard MACD. Just stay tuned when I release the next video. Watch that. That's a very good way of decreasing the lagging of the MACD. You know, we're gonna have a very fast reaction very fast MACD that actually can give us a very early signal to trade. Thank you for watching this video. If you like my videos, give me a thumbs up and subscribe to my channel. I'm releasing many videos every week, especially at the weekends, and I analyze the market, so watch those. Click on that bell icon just to get notified as soon as I publish a video, Sometimes the videos are on a spot. There's signals so you can get in the market. And if you have any questions, any problems, anything you want to know that I haven't discussed in my videos, tell me what to do in the comment section below and ask your questions. I will answer all of them. Thank you so much for watching and have a nice day.